Hi everyone. Happy New Week. Happy Monday. Let's run down the week's fundamentals, the news coming out and what to expect for the week, at least from my own perspective. You can see I monitor mostly US news and corresponding other currencies like the euro and the GBP and so on. So, I have like seven pairs that I look throughout the week, but I'm more concentrated on the US pairs. So this week, I'm going to run down the whole news coming out and the fundamentals, see if it's aligning with my bias or not, and so on and so forth. So on Monday, which is today, we pretty much have nothing serious coming out apart from pending home sales and uh yeah, pending home sales on the US data, nothing much. The pound, same thing. You have the housing markets data coming out. Tuesday, we have the Chinese manufacturing PMIs. Pretty much, why I monitor the Chinese data, I use that to weigh against the commodity currencies such as Australian and New Zealand. So the Australian and the New Zealand commodity currencies I weigh them with the Chinese currency in the sense that China is a major benefactor when it comes to the New Zealand and the Australian dollars. So they kind of like make what's it called? The fundamentals tip the scale for them. So this is pretty much an important data for them, the Chinese manufacturing and the PMIs. So same on Tuesday, we have the Australian interest rates decision coming out. But I think they've cut rates twice this year already, which is you can see they had their first rate cut around April, then had another one on July. This this month's interest rate decision is forecasted to remain flat, which I kind of like agree with. The what's it called? The inflation is moderated. I mean, it's coming down. It's easing. Yeah, the economy is kind of like in a slow growth phase, but not that robust yet. Then we have any other very important data coming out? Not really. These are the euro data. I like to like look at the euro data in a whole, not break them down. But the Germany interest rate is coming out. It's expected to have a little bit of a hike. But look at the general data because I have like five countries consisting of the euro. The the Germany, Italy, the Spain, and yeah, the four countries, German, Italy, Spain, and France. Yes. But Germany is like the big guy there. They have more say when it comes to the euro economy. Then on same Tuesday, we have jobs opening for jobs. We have the labor market data coming out on the United States fundamentals. On Wednesday, we have the euro inflation in total. So which is expected to tick up a little bit. They've been flat for a while. They've been flat. They've been at they've gone below targets previously, and they've come back on target, which is 2%. Now they expected to have at least one or two tick up, which is still normal, but anything above 2% when it comes to inflation is considered high. So, but this is moderate. Then we have the manufacturing PMI ISM. The last PMI that came out from the US eased a little bit, but it's still above 50%, which is pretty much in a growth phase. So the US economy for me I think it had a soft landing, and at the moment it's coming back up. That's how I'll say it. So I expect some kind of growth moving forward from the US economy. Yeah. I mean, provided the what's it called? Inflation and what's it called? Labor market alliance. Yeah. So on Thursday, we have, the Australian Financial Stability Review, which was more like their forward guidance from their rate cuts, what's it called? Interest rate decision. So this is like a forward guidance. Japan has a consumer confidence coming out too. Then on Friday, on the US, we have the non-farm payroll and unemployment rates. The unemployment rate has been pretty much flat on the same level for a while now. For the past how many months now? You can see since probably since this year, it has ticked up since July. Yeah. But it has remained within 4.5 to 4.3 to 4.6 within this year. So employment is pretty much still high, but the other one, what's it called? This is the unemployment. Then the other ones, the added jobs is also trying to like, match it on the same level. So I think the Feds are looking forward to this because they had the rate cuts last week, last 2 weeks, the last rate cut, but they also promised one more rate cut this year. So I don't know, that might come or not. But from what I'm saying, from my own understanding, one more rate cut is pretty much expected because at the moment, but they don't want to what's it called? They don't want to like be in that hawkish tone too much because if they lean towards that, inflation might skyrocket back to the highs. So they need to be moderate about it and see how inflation goes. So this data coming out is important, the labor market, but I think the one I'm very much interested in is the inflation. So I'll wait for the inflation data to come out, then I'll be interested in US buys because with what I'm saying, I'm more interested in the US buys at the moment. So that's it for the fundamentals for this week. Then I use this app, Edge Finder. I use to go over my cut data. These are like a commitment of traders. It's like a net positioning of institutions like the institutional traders, the hedge funds, and so on and so forth. This is where I see the prices or where I see what they did the previous week. It comes out every Tuesday, but the data doesn't they don't release the data to public until Friday at the end of the what's it called? At the end of trading day. So all this data is from last week. You can see this was 26th. Last updated was 26th. So this data was from last week, but I kind of like still use it to see where the institutional traders are what they're interested in. So you can see that the USD they had over 14,000 long contracts and 24,000 short contracts. They added more long contracts, which is 1.5, and removed over 1,000 short contracts. So overall, they have a net position of 3.56 long, and then a net position of, I mean, the net position is still negative though. Like they are still net short, but they are reducing the short. You can see that they're reducing it. As for uh, risk assets like gold, uh, risk assets like gold and what's it called? The stock market, the NASDAQ and the S&P 500. Same thing. You can see we have a net position of 3 points. I mean, these guys has been bullish for the past how many weeks now? They've been ripping through all-time highs, creating new highs, and I don't see that calling off anytime soon, you know, with the US market about because these guys show you where the US economy is also going. I mean, people are already like trying to like predict this to come down or something. Any retracement here is an opportunity to buy back, the way I'm saying it. This is not the financial advice though. It's just speculation. Same with the NASDAQ. You can see that. This is a very good what's it called? This is a very good app. I wouldn't call it an app. It's more like yeah, it's a good site, Edge Finder. They bring all the fundamentals in one place for you to go through. So this is where I go through my calls. I go through my seasonality here too. I usually go through my monthly seasonality and the weekly seasonalities. So this is what I do at the start of each week to, see, uh, gauge where the market might move or not. So I do this every Sunday or Monday, depending, the time I have for it, but I don't miss doing this. I go through each fundamentals and I go through data, I go through seasonality and so on. So this is NASDAQ. The September was expected to perform less, but you can see the market has been ripping through. So it doesn't mean seasonality it's not like a one time, or it's not like a one-time fix, or it's not kind of A plus something. It's just an extra data to look at. I also look at seasonality weekly. I'm more concentrated in the weekly ones. I look at the weekly data on the seasonality, so you can see this is the new week. Price is expected to perform a little bit less. Wow. I'll combine this with the data coming out. Yeah. So then after, when I'm done with this, I go through my fundamentals, I go through my data, then I go through the charts last. Now the charts, I start from the weekly charts to see, you know, forget about how messy the charts are. I go through the weekly. These are, what's it called? These are just pivot points where I mark out my support and resistance. Yeah. So then I go through my charts. I start with the weekly. I go down to the 4 hour, 12 hour, 4 hours, just to get a sense of trends and so on and so forth. You can see that this is gold. I mainly trade futures and I trade four pairs. I trade gold, I trade silver, I trade NASDAQ and the ES. Why I trade these four pairs? I mean, I group them into two places. Gold and silver, I trade them in the same direction. I'm more like a directional. I trade them in the same direction. ES and NQ, I trade them in the same direction. So depending on which trade I got in first, I look for the other trade in the second one or the second pair. So if I'm in gold, I'm also interested in silver at the same time. If I'm in ES, I'm interested in NQ, vice versa. So that's why I monitor the four pairs. So basically, I just trade two pairs, but I get in on the one first, then I wait for the other ones to get to my zone or not. But I still wait they all have their respective zones, apparently, but sometimes you can get to be in the same trade or in the same pair, yeah, the same trades, but same direction too. So, or they might be coming up from a different zone. You can see that. So this is how I prepare for the week. Fundamentals, data, and I go down to charts to see. So let's do a little bit of charting on these pairs and see. So you can see this is a 1 hour time frame. Obviously, this is gold. You can see the price is ripping through. We're in a very bullish market at the moment, and yeah. So like I said, this week's unemployment that is coming out. So if the data is supporting the US economy more, which means if it's favoring the US economy, we're expecting gold to ease off from these all-time highs. And if it's not, we expect a continuation. Something on silver directions. Then on the risk assets, like the stocks, the S&P 500 and the NASDAQ, same thing. If it's supporting it, we look for colors to buy back. So I'm more like a directional and a trend trader. So I mostly use Fibs. I just wait for price to get to the best possible value I can get, then I buy back. So I'm also looking forward to transitioning to swing trading. For now, I scalp. Like when price gets to zones I want, I get in and out of trades within few minutes. But that has been mentally draining. It has not been easy to scalp, but yeah, I've been scalping for a while now. But my strategy supports more of a swing trade. So swing trading is what I've been building towards to. Yeah. So with the fundamentals, the data and everything, so trading is where I'm going forward to. So this is how I prepare for the week and, you know, stay ahead of the game.